Hi everybody, welcome to another update on the stock screener. Today we're going to continue with our NPV calculation technique and give some other examples. We are going to look at capstone copper, trigon metals, and alphamine. I believe that cash flow is the most important to look at when you invest in companies, because cash flow is all that matters. Nothing else matters. You want a company that can generate money, period. So let's start with Soma Gold. So this was the chart of Soma Gold. 70 million enterprise value, that's somewhere here. And as you can see, the cash flows will come in. That's the projection. And you can calculate this very easily by creating this table yourself. So pretty good. In a few years, we will reach the enterprise value, and that's around 2025. And from there on, we will start rising like this. So the share price could anticipate these cash flows already. So it could rise to 100 million even in 2024 already. So that's next year. So very good company. And depending on the gold price, if it rises, then all of these blocks will go higher. So let's start with capstone copper. It's best to show this on our Excel here. So how do you start building this table? Some people have asked me that, how do you create this? So just put this in the Excel, then the years, and just fill it in. So start by filling in the all-in costs, right? Yeah, you need to find the all-in cost yourself, of course. I already know what the all-in cost is for capstone copper because they told me. They told me in their presentations what the all-in cost will be. And you need to find this yourself. For example, here, you see it's around 2.7 going to 1.6 and then below 1.5. But this is the C1 cash cost. The all-in sustained cost is a bit higher. And I put it here. So 3.4 for this year. For next year, they will increase production from Mantos copper and then decrease the AIC. Then they have another project, Santo Domingo. I think that they could build it in 2028. So that means they need capex somewhere here in 2026 and 7. And that's a lot of capex, 1.5 billion capex. So I have spread it out over these 2 years. 700 million per year. The normal capex is around 200 million, 300 million. So Capstone Copper is a very high capex company, and you need to take that into account. So that's the capex. We have the costs. Copper price, very easy. You just fill it in. I think copper will be around $4, going to 4.5, maybe even higher, but let's be conservative. That's the CAD exchange rate. And then we start calculating the revenue. Very easy. Revenue is just production times copper price times the exchange rate. And then we have the revenue in CAD. It's really easy. You just use equal sign then click on this times click on that times click on this, and then you will have your formula. For the costs, we just do the same. Production times all-in sustaining costs times the exchange rate, and then we have the cost in CAD. Then what's the interest? Yeah, the interest, you need to go to CDAR and find the financials. So this was the latest financials on CDAR. And you can see the finance costs, interests are around 6 million per quarter. So times 4 is 25 million. So we add that here. Interest is 25 million times the exchange rate. Yeah, it's pretty high interest costs. Add the tax rate here because we need to pay taxes. I think it's around 40% in Chile. And then we can calculate the net income. So net income is just revenue minus costs times 1 minus the tax rate, and then minus capex and interest. Very easy. And then we take the net present value of that net income. And that's a special formula. So what you do is you take the net income divided by 1 plus the discount rate, 10%. And then you do times 1 for this first cell. Here you do times 2. And here to the third. Of course, you take the previous NPV and then you add this one to it. And here, for example, you take this one plus this one discounted to the fourth, etc. So you get this whole row here. And when you add everything up, you will get the NPV 10% for all of these. So there is a formula equals NPV and then 10%, and then you fill in all the cells here, all the net incomes, and you will get $4 billion CAD. And this should be exactly the same as this number. See? So we have two ways of calculating it. One is just by keeping adding the different cash flows until you get this, and this is created via this formula. So it works. And then you get this chart. We have an enterprise value for Capstone at 5.8 billion. That's somewhere here. And you can see that Capstone is nowhere at 5.8 billion right now. So I think Capstone Copper is overvalued. Yes, it's very overvalued currently. And yeah, I mean, look at the cash flows. They are minimal. Net income around 400 million, and then they need to build Santo Domingo. So they will have negative cash flows. Eventually it will go to 1 billion cash flows. That's good. So from 2028, I think it will start to look better. But in the first 5 years, I don't think Capstone Copper will do anything at the current copper price. It's overvalued. So at 5.8 billion, nothing is going to happen. and only somewhere here, when they get Santo Domingo built, then the cash flows can start to come in. And then the share price will probably start rising. So everything depends on that Santo Domingo project that they still need to build. Okay, so that's Capstone Copper. It's pretty overvalued. Now let's talk about AFM. Some people are hyped about that. This is the result. So basically, net income is very stable at 150 million per year. That's good. They have built the Mapama South. So production is going to increase to 20,000 tons and at a good margin, and will give nice cash flow. The only problem that I see is that the enterprise value is already 1.2 billion. So that's here, 1.2 billion. And the cash flows that come in, 150 million per year. I mean, you need to wait 10 years until it reaches your target of 1.2 billion. So do you want to wait for these cash flows to come in 10 years? This is, I think, a bit overvalued. I would buy this maybe at 30% less, somewhere here. That would be a better buy, but currently probably overvalued. So that's AlphaMin, but I mean, this is a good company. It generates cash flow. Probably it can even grow its production in time. We don't know yet. They don't have the resources yet, but that can come. Next one is Trigon Metals, and this is one of the best opportunities that you can get. This is also a copper mine, and compare this one to Capstone Copper. The metrics are completely different. This only has an enterprise value of 40 million. That's somewhere here. Look at how fast the cash flow is coming in. The upside of this company is immense. It can go from 40 million. You just need to wait 2 years or so, and then it will start skyrocketing from 40 million to 500 million at least. It's a 10x even at 4.5 copper. These are the numbers. So check it out. It matches. So why is this growing so fast? Why is this so much better than Capstone Copper, where we are completely overvalued at this point? So I don't understand why this company is still at 40 million, while this is going to be a 500 million company in the future. So what is the production? It will be 4 million pounds next year. Then they will go underground, all financed. So go to 20 million pounds. That's 5x in production from 4 to 20. That will give us the cash flow in 2025 to finance the expansion for 2026. So here we have the capex. That's still to be paid for the underground for 2026. So that's why we have a bit of negative cash flow here, because they need to build the underground from 20 million to 30 million to 60 million. Okay. So that's another 3x in production from here and a 10x in production from here to here. right? So a 10x in production in just a few years. That's the growth that I see here. Look at the costs. Costs 3.8 going to 2.5, 2.2, and eventually 1.5. Very low cost production. So the margins are going to be very high in a few years. And yeah, tax rate, net income. Yeah, so basically, this is an extremely high growth company. And if copper starts to rise to $5 to $6 later on, then I mean this is a jackpot that you can win, and it's all financed. So only thing we do is just wait it out. Actually, I'm starting to like this more than Soma Gold. Okay, so here we have the 4 comparisons. We have Soma Gold here. We will reach the enterprise value in 2026, 2025. So just wait a few years and then we can start moving up. Market can anticipate it earlier on, but I think in a year or so we will see the fruits of this. Alpha min much too high. I don't think there's a lot of upside here, unless the tin price goes up, of course. But let's not try to gamble on the tin price. Let's assume tin stays at current levels, and then we see cash flow coming in, but it will take time until it reaches our target. And after that target is reached, then we can go higher. So I don't expect a lot to happen at Alpha min. Same with Capstone Copper. Much too overvalued. And the problem here is, the problem is that they have a lot of capex. So not a lot of free cash flow. And if they decide to build that Santo Domingo project, then they will have even less cash flow. So a lot of risks. Margins aren't great. So once they build it, then of course it will start rising very fast. But they have been delaying for years for that Santo Domingo project. I'm not sure if they can start building it yet. Copper prices aren't that great either at this moment, so not a lot of cash flow coming in. Then we have Trigon Metals. The good thing here is that they are financed, okay? Financed for production in 2025. So that's where the big cash flow starts coming in. And then they can build the second phase for 2026. And then it will start skyrocketing like this. And we're only at an enterprise value of 40 million here, which is even better than Soma Gold. Well, they are a bit the same, but the upside here is much higher. 40 to 500. Here we have 70 to 200. So it's 70 to 200 times 3. And here we have times 7 times 7 until 2030. So yeah, Trigon Metals has much more upside. However, they have the risk here. The risk that they can't do what they say. It's not in production yet, so that's the speculative risk here. Soma Gold is already in production, and soon we will get the production numbers to see if they can achieve what they say. If they can do it, then this is going to happen. And it looks very good. If gold can even go above 2000, then it will be even better than this. It's already good compared to these other projects from Alphamin and Capstone. Okay, so this is how you compare projects. Look at the enterprise value, which is the market cap plus the net debt, right? And then look at how the cash flows come in. If the enterprise value is very low to the cash flow that comes in, then it's a very cheap company. If it's very high like this or this, then it's overvalued. Okay, so try it yourself. I think more videos will come where we will compare against some oil companies and some potash companies maybe. So I'll see you in the next video, and bye.